Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader, and it is 5 a.m. Eastern Standard Time, December the 18th. All right, some real serious news was announced last evening, and it really just goes to show you how rigged this market is. Let's first bring up FedEx. And I mentioned with members last night on Market Wrap, and actually the night before as well, on Market Wrap, that we were seeing a considerable amount of topping action on the Dow transport stocks. And what I mean by that is that while, yes, we've been closing up sequentially on the Dow transports, we've been closing well off the highs of the day. And that is a sign of profit taking, especially when they rally the Dow transports up and into resistance levels. So that is obviously not a good thing, especially when the major averages are at all-time highs. We have the China trade deal, quote-unquote trade deal. I don't even know what to call it, to be honest with you. I guess it's not trade deal. I guess I don't know what to call it. We have to take a stupid pill nowadays to trade these markets. It's not QE. Okay, don't look here. It's a trade deal, but there's no trade deal. It's the Wizard of Oz stuff. So anyway, FedEx comes out last night. Good morning, RL. Top of the morning to you. So FedEx comes out last night. Not only do they miss on their forecast, their guidance is cut as well. So they took a hit overnight last night. This is a 4-hour chart. And then you had figures come out on light sweet crude. Inventories built. Let's drill down further here. I had an update on this computer last night. I'm making my screen resolution off. You could see that after the announcement, we took it on the chin, oil did, and we have pulled back about 1% on the price of oil. So that is another indicator that the Dow transports have every reason to be weak this morning, and in particular, the Russell 2000 as well, which has behaved fairly good of late. Good morning, Arthur. Good to hear from you. Happy holidays to everyone, please. Before I forget. And when you take a look, you would expect there to be a little bit of pressure on the averages. Who could fault them? But negative. We are up and gaining steam on the S&P 500. It's crazy. It's crazy. So it looks as though what they're going to do, they're going to continue to hit the bid with, or hit the ask with small lots, and they're going to keep this market going up higher into the new year. And that's no great shock. So let's take a look at the other major averages. I would think that you might see a little bit extra pressure on the Dow Jones. Hey, Sam, good morning to you. And of course not. The Dow is up as well. Oh, this is not going to be good. Okay, so the Dow is up. The NASDAQ, it's consolidating. And remember, yesterday morning, we were talking about some divergences that we were looking at on a 4-hour basis on RSI, on the NASDAQ. We put in higher highs on price, lower highs on RSI, and the divergence continues here. Same thing holds true for the S&P 500. I got to clean this up. Lower highs on RSI, and we are breaking out on price. And they can keep this party going into the new year. Now, yesterday we saw a lot of tug of war at the 3,200 level on the S&P 500. I think that's the line in the sand to watch. To see a close above 3,200 would really indicate that we are going a lot higher here, perhaps a blow off top. If we continue to fail to close below, close below 3,200. Excuse me. If we continue to fail to close above 3,200, then that's going to signal problems for this market. Let's go to the dollar. Now, the dollar, which became oversold on a 4-hour basis back on the 12th, has continued to move up higher. I think that this is it's obviously an ascending wedge formation, but I think that we're going to resolve this to the downside, although it is up this morning. Now, when I'm taking a look at gold of late, I'm bringing up this chart here, or these series of charts, this grid. And what I'm looking for, I'll show you what I'm looking at in the below screens. First of all, we have gold, which is doing well this morning. It is moving up higher despite the strength of the major averages. What matters to me is the 10-year yield, or the 10-year Treasury bond. I apologize. I'm still half asleep here. The 10-year Treasury bond price, which managed to recapture a support level. This is a 15-minute chart overnight. Here's a 4-hour view. And it's beginning to pick up a little bit of strength. We don't have a new weekly high on the 10-year yield. Sam, I'm reading your note right now. Our Prime Minister said 2,000 euros in your account if you use a credit card. Yeah, do debt. So, are they doing helicopter money? If you spend on a credit card, they're giving you cash? Have they gone to that now? And I'm also, on these series of charts, I'm watching the US dollar and, of course, the futures. I'm looking for a risk-off environment, meaning money coming out of stocks, sending money into bonds and into gold. Now, what's unusual here is that you're seeing a bit of a convergence of the price action between gold and the S&P 500, which I don't expect to last all that long. Frankly, I think that the price action on the S&P 500 this time of year is algo-driven and purely manipulated. That's my own opinion. Let's bring up NUGT. Well, NUGT is, yeah, it's ripping this morning. All right, so what we did yesterday was we booked profits on our 29.50 strike price calls. I'm not sure if Patrick's out there. I know he was scalping covered call premiums as well yesterday. And thank goodness that we did, because we broke out this morning, at least in the pre-market. This is on fairly light volume, I'm sure. What kind of volume do we have here? I'm not even picking up. I'm sure it's on light volume. It's not even registering on my bars here. So the volume here is quite light in the pre-market, but if we were to open up where we're at or better, we're going significantly higher on NUGT. But we did later in the day yesterday, we did open up a new covered call contract expiring on Friday, but I raised the strike price up into I think the 30-50 strike price, and we brought in some premium there. So I'm satisfied that we did roll up on those contracts. I certainly did not want to get called out of a portion of our NUGT position, because I think that we're going to get some considerable upside here in the new year. So more to come on this trade. What else are we looking at? Oh, Bitcoin. Let's go back to the... Yeah, volume is only 300 shares here. I don't know why I didn't show on the other chart, but it's only 300 shares in the pre-market here. So keep that in mind. Okay. All right, Sam. Yeah, Arthur, I was watching Bitcoin. I'm doing I was up really late last night, and I was doing a ton of analysis on Bitcoin and correlations. And I came up with some really, really interesting charts that I'm going to go over tomorrow night on Thursday Night Live. And I'm going to show why I think that Bitcoin, in all probability, just hit a bottom, and we're probably going to go a lot higher here, especially if they manage to pull back yields, and I think they're going to. I think the bonds are going to rally, and this is just really, not that the charts are telling me that per se, I just think that intuitively they need to drop yields because we simply can't afford the interest payments, and if they do, inflationary pressures are building, and I have some charts to show that Bitcoin and inflation have a direct correlation, and it's pretty interesting stuff. So I'll reveal that tomorrow night. So I hope you can join in. Sam, we got another $3 billion extra from the balance, so they want to, I guess, they have to discuss. So it sounds like they're experimenting with some helicopter money over there. Yeah, coming through Theater New Year here in the States. It's crazy. It's also very crazy. But I think ultimately it's what's going to help keep a bid under Bitcoin, under gold. So you really need to be positioned right now. Let's move. I want to take a look at bonds, 10-year. All right, so we have a higher low here. In fact, let's get rid of this. And there you go. We now have a new rising floor on bond prices, but we still have a lot of technical damage that's been done here. So while it's nice to see bonds rising, I don't think we're out of the woods yet, but it's looking very, very favorable, at least for today. And you have higher lows here on RSI. And this means a pullback on yields. Let's see how the dollar's behaving here. It's very strange to have bonds up, stocks up, gold up at the same time. All right, speaking of Bitcoin, and for those out there that are members and you're waiting for your stock chart requests, yes, if you're wondering if I'm doing them, I have a few to go over here. So just bear with me. All right, so Bitcoin is at current struggling to try to recapture support. We are up about a percentage point. RSI is putting in higher lows. And we've broken out on RSI. No breakout yet on price. Let's try to make this. That's better. Okay. Better. So once we see us clear, the prior high here was 67.15. Once we see it close above that level, that'll bring us above this upper band of resistance as well. And then a nice consolidation. And then I think we proceed higher. Now watch bond yields. If bond yields pull back, my guess is that Bitcoin is going to rally. Why? In anticipation of inflation. I've done the analysis. It's undisputed that there is a correlation. Whether you use the CPI, whether you use the Pringles Inflation Index, whether you use the CRB Index, I've done the analysis. It's there. So I'll be going over those charts tomorrow. Let's take a quick look at the euro and the yen, and then I want to segue over. Oh, you know what? Nat gas. I know Patrick's probably going to be out there looking for nat gas. And here's what I was worried about with nat gas is that what happened is that we became very oversold on the spot price. We rallied, and very similar to what I'm worried about here for the dollar. I'll come back to this chart. Here, we were oversold, ascending wedge formation with a resolution, at least on that gas, to the downside. I think we get the same for the USD. It doesn't look that way right now. But it didn't on Monday morning either. It didn't yesterday morning either for nat gas. So what we did here is that we broke this lower band of the rising wedge formation, and that is not good. Not good at all. So warning flag on the track here for nat gas. We may see a continuation move lower. And beware the energy stocks as well today, folks, because if you have the inventory builds, which rose heavily, you have oil down a percentage point, you have nat gas pulling back this morning by, nearly a little over 0.75 of a percentage point, you're going to see pressure on the energy stocks. So just be careful here. And you did see a little bit of topping action on those stocks yesterday as well. Members, I went over the XLE on Market Wrap last night. All right, going back to the currency market really quick. And the reason why I focus on the currency market so much and the bond markets because last week you began to see the dollar and bonds drop in tandem. And that's a sign of a lack of confidence in the U.S. And that's Armageddon type stuff. And I'm not saying that we're going to get that consistently. I think that the Federal Reserve is going to move in there because they're being battered over the head by the president yet again. And they're going to have to act to try to drop the dollar. And to do that, they're going to need to booster bonds and keep yields under control. So the euro, which is critical to the Dixie, the dollar basket, makes up 55% of that basket. It's critical to see a bid under the euro. We were overbought. I mentioned this last Thursday night when we were gapping up live. I said, this is not going to last. And sure enough, we pulled back. What's impressive here is that we're holding a lot of those gains. And that's despite the fact that you have Boris Johnson, who is acting. He's acting as if we are, or they are, going to proceed with a Brexit. Taking a look at the yen. It continues to flirt with a breakout above this upper band of resistance. We spoke about the Japanese stocks and the currency 2 weeks ago. They were showing signs of strength, not just on a 4-hour basis that I'm illustrating here, but on a weekly and on a monthly basis. The Japanese markets are beginning to firm up for a longer term trade. So watch for a breakout here on these stocks. If you see a breakout, in particular on the euro and to a lesser extent on the Japanese yen, expect a break of the US dollar, and that should put a bid under gold. And what will the catalyst be that sends the dollar lower and the euro higher? It could be the Federal Reserve itself. Let's watch their balance sheet, which gets revised today. I think it'll show tomorrow, but it gets revised today. So let's see what they do. Sam, well, they sold Italian debt $3 billion. Demand was $20 billion. So they sold only $3 billion. They had a lot of demand. So yields should have stayed relatively low on that demand. Interesting. Sam, just so everybody understands, Sam is over in Italy. So he kind of gives me the perspective from the Eurozone with a couple of other frequent viewers of what's going on over in the Eurozone. Actually, Sam, are you over in Switzerland now? Or that's Lytham. That's over in Switzerland. But he's a Brit. A lot of you folks travel all over the place. I'm so jealous. Let's take a quick look at copper. Copper rolling over here. Lower high. All right, so copper stalling out here a bit. Anything else we want to take a look at? I think we killed it today in terms of what we want to take a look at. The one thing I will point out, I want to take a look at the VIX futures. The VIX. Oh, that's right. You mentioned that, Sam. That's right. The debt issued was in U.S. dollars, not in euros. Yeah. Where is the VIX? The VIX closed up yesterday, which was rather surprising because you saw the S&P 500 close up as well. So somebody was in there buying insurance. Oh, this is a CBOE. Yeah, no, this is right. Here's the VIX spiking up higher yesterday, pulling back a little bit this morning. But when you take a look at the price action relative to the S&P 500, a little bit of a divergence there. BA. In fact, I'm getting long-winded here, killing time. Let's go to It's hanging on by a very, very thin thread. I mean, this really illustrates how much of a thread Boeing is hanging on by. And has it bottomed? I don't think so. Not yet. I think that if we fail to close back above, this is a weekly chart, Arthur. If we fail to close back above this upper band of currently support or resistance, I should say, what will happen is that we may get a week or two of it trying to recapture, rallying back up, tapping the upper band of resistance, and then after a couple of weeks, a fail, a rollover, and we proceed lower. If we rally back to close back above this upper band of resistance, well, then we may have a rally on our hands. Let's go to a daily chart. So let's overlay weekly resistance. So our hierarchy, when you take a look at this chart, for those not familiar with TrendSpider, this is a daily chart, but what I'm overlaying here in solid line are daily support and resistance levels. In dashed lines on a daily chart are weekly support and resistance levels. So while it's encouraging that yesterday we closed above daily support in solid line, we failed to close above weekly support. So the hierarchy is obviously that you want to see a close above weekly support because that's far more important, a lot more history there. And we don't have that yet. Now, if by Friday, 4 p.m. Eastern Standard Time, we're back above this upper band of resistance, then we could look at Boeing as a potential long. So what I would do here, I really don't care about this green line here on daily support. It doesn't matter to me. What I care about is this line here. I want to see a close above it. Now I'm going to keep this alert alive only for the next couple of days. It'll expire. I'll get alerted, and I'll know to come back and see how we closed out. And for those that want TrendSpider, there's a link down in the video description area below. You get a discount of 25%. Just use that link down there in the video description area. All right, so I don't care if we bounce. I care about if we break through. That is it. I want to see a close above that level. And there you have it. Now, what would also be interesting, suppose this support level does hold here. That's wonderful, but I don't care about it until we break out and above this upper band of resistance. And this is one we'll keep active for a few days. We'll see what happens. And there it is. So I'm not placing too much emphasis on this daily support level. I'm focusing more on this prior support level on a weekly basis and this upper band of resistance on a daily basis. So we'll see what happens here. It's going to be interesting to see whether or not the transportation stocks continue to fade. Remember, going to the daily charts, you're seeing a lot of fading on the Dow transport stocks. And that is not going to bode well for the Boeings of the world. So just be very cognizant of how the index is trading along with Boeing as well. The transports are in fact closing up. However, they're not closing strong. You're welcome, Arthur. Anytime, brother. Merry Christmas to you as well, and the best to your family. I have a couple of other symbols to get to for Tom, TBT. Let's clean this up a bit. Oh, by the way, I got invited back to, I am the top repeat webinar guest for TrendSpider, and I'll be appearing with them again in February for the 4th time. I think I have the record. And this time, it's not going to be just simply a webinar. It's going to be a very big live stream. And they have a huge base of followers on Twitter in particular. Not so much on YouTube. I think I have a bigger following on YouTube. But on Twitter. So join us there. I'll be sending out invites. If you're on our email list, I will certainly send out an invite, and I'll talk about it as it rolls out. But I'm looking forward to it. It's going to be really a lot of fun because they're looking to experiment more with the format, and frankly, so am I. So our interests are aligned. Hey, Tom, good morning to you. All right, so the TBT, this is a 20-year bond bear ETF. Okay. So I don't want this to go up, to be honest with you. I want it to drop because that means that you have the TLT, which is the opposite bond fund, the long bond fund of the 20-year bond price, that will be moving up. That means yields are dropping down. So in this instance, how does the chart look? All opinions aside, we were oversold relative to the third standard deviation Bollinger Band. We hit support, and now we are rallying back. We are in a ascending wedge formation on a weekly basis, and that has put pressure ever since September on gold. So what I want to do here here's our upper band of resistance. Ideally, we break, and this is from I'm speaking my book right now, and I'll make that completely public. I am speaking my book. Not that anybody on CNBC would ever admit that. I am completely speaking my book right now. Freely admit it. For all transparency purposes. We are struggling to make new weekly highs. If we fail to hold this lower band of support, then we're going significantly lower. And I think that ultimately that is what's going to happen here, is that we are going to break to the downside. This is a very similar chart. It is interesting. Yeah, Tom, it is. It's very similar to the chart of the U.S. dollar on a, let's bring up the UUP really quick. Not so much on a weekly basis, but on let's go to a 4-hour basis first. We became oversold. This is a 4-hour basis. We're limping up and now beginning to break down here a little bit. So back to the TLT. This is not a great analogy. Back to the TLT weekly chart. Now, if we break, the TBT is what I want. Sorry. I haven't had my second cup of coffee yet. There we go. That's better. I thought I was losing my mind for a second. Okay, so dead cat bounce here. I think that this will be resolved to the downside because if we break out here, Tom, think of the consequences. The consequences are that yields skyrocket, the stock market drops, and we begin paying more interest on our debt. They won't allow that to happen. And the president started hammering away at that yesterday, again on the Federal Reserve, demanding that he drop rates to zero. I don't think he's going to do that yet, but you don't know what tool they have at their disposal to cause even more bond weakness, and they could be just going in and buying more bonds out of Belgium or Lithuania, or wherever they like to buy them as their proxy country, and cause a weakness in bond prices, and that'll cause the TBT to drop and yields to drop as well. So if we get a breakout above this upper band of resistance, well, then it's off to the races. You would want to be short bonds, but I wouldn't be a buyer here just yet. But I will say this, that we are seeing higher lows on the stochastics and RSI. Let's go to a daily chart really quick. So here's your wedge formation. We had broken out back here on the 6th of December. The past several days, a lot of resistance above. I think that the TBT is in no man's land. No reason to buy here at all. If there were a point where you wanted to show a little bit of aggressive behavior by buying the TBT, the TBT is right here on a break below excuse me. If you wanted to short the TBT, you'd want to short it on a break below this lower band of support. I want to get notified. And that means that yields are moving lower as well because the TBT is moving lower. We'll just keep this active for a couple of days, see what happens. Now, if ultimately this gets resolved to the upside, well, these markets are going to have a lot of problems because if the TBT is breaking out, that means yields are breaking out as well. And God bless us all. And don't get me wrong, yields should be higher. But the problem is we're bankrupt and we can't afford the interest payments. So those are the resistance levels I would watch here, Tom. Just beware of this topping action. You do. Right here. 26.15 in particular. A lot of resistance at that level. Let's go to CORN. I want to go to a monthly chart here. The Federal Reserve conveniently backs out food and energy out of their inflation numbers. We don't. Now, again, tomorrow night I'm going to be doing a live stream on correlations with Bitcoin or why I think it's going up higher. And I'm no Bitcoin freak here. I'm just looking for a reason why Bitcoin would rally. And I found it several days ago. And the stars are really aligning up here. So more on that tomorrow night. All right, so we have higher lows, double bottom setup on RSI, monthly basis. This is not insignificant. And we have broken out. Now, price, we're still waiting for. Price is yet to show signs of rocket fuel being available to send these shares higher. We have stiff resistance above. We may be getting a higher low here on Stokes. Way too early to make that call yet. So monthly view, bullish RSI, but that's about it. I would not be a buyer at these levels because you're buying right into monthly resistance. Weekly chart. The story changes here quite a bit. So again, here's our higher low in RSI. Stokes, which were showing some signs of strength on a monthly basis, are definitely showing signs of strength on a weekly basis. And price, which was showing no activity whatsoever on a monthly basis, broke out last week. So here is a nice triangle formation. Here's the breakout on price, and we are breaking out. Now, we don't want to forget, let's overlay the monthly resistance levels. Just keep in mind where we have resistance above. Now, what would my play be here on CORN? It's pretty simple, right? It always comes back to show me. Show me you have what it takes to get bought. And what it takes to get bought, in my book, is a close above monthly resistance. I don't care if it touches. I don't care if it bounces. Doesn't matter. I just care about a close. We'll keep this active longer than the other alerts. So we're looking for a breakout here. And this is what I think is going to happen, Tom. We want to see a touch and a bounce off of the prior breakout point. We want to see a retest in short. So these are the rules. It's basically a rules-based approach. Either A, a pullback to this lower band of support, and or B, a breakout above this upper band of resistance on a weekly basis. Until then, we sit, watch, and wait. We'll leave off here with UUU. This is a first for me. I don't know what this is. Tom, you surprised me here. What is this? Agree, I'm watching for signs of inflation growing. Small nibble. So far on watch. Oh, uranium. Okay. I used to trade the URA. Okay, so similar to the URA. Right, URA. Let me just see if my memory's serving me here. Yep. Many moons ago. All right, UUU. Let's clean this up. Let's go monthly high level first. Domestic uranium. I mean, this is what's left after what... You sure this is right? Universal Security Instruments. Is that accurate, Tom? Can you verify that, please? Oh, I see. URA is global. So Hillary Clinton didn't sell off all of our uranium? Tongue in cheek. Sorry if there are any Hillary supporters out there. All right. So, monthly view. Stokes are like a coiled spring. And they've been that way all year long. Now what we're seeing here is the possibility of a higher low. We were trending up higher most of the year, but we ultimately failed, not on just on RSI, but on price as well. Let's throw some overlays up here. Monthly. All right, so it looks as though we have some monthly support below, and the markets are telling us, or they told us back in November, it's good support. It was very good support back here. We rallied off of it, and it looks as though we are holding support. We're up so far this month. We do have resistance above. Let's drill down to a weekly view. A lot of resistance up here. So what's the play? Let's throw some monthly overlays up. All right, so to me, this topping action here is ominous. I don't like it. And we're threatening to pull back yet again. Whether we break down to new yearly lows, I have no idea. Probably not. But to get long of these shares, we're way too close to critical prior support, currently resistance right here. So my play would be to buy strength. Buy on a monthly close above. I need to see a close above this level. Or if we pull back, higher low along this lower band of support, and that may be an opportunity, but I would defer to the daily chart for a trigger of as to when to go buy. Now, looking at the daily chart here, and I wouldn't buy off of this because it's a bullish observation, but I wouldn't go buying off of this observation, so I'm going to put that out there. What we have is an inverted head and shoulders setup, of which we broke out of on the 13th. Left shoulder, head, right shoulder. Here's your 45-degree neckline. And what we did yesterday is that we pulled back, we did a retest. So if you're of the discipline to stop out on a new daily low, that's fine. You could do that and get long. But here's the real critical line in the sand right up here at around 81 cents. So daily chart looking bullish. I don't like these Stokes at all. They're declining. You already have the fast line down below the 50 level. So just be forewarned there. You bet, Tom. Anytime. And with that, folks, I'm going to call it a day. I'm going to hit the gym now and have another cup of coffee because I certainly need it. Everybody have a profitable trading day. And if you could please hit that like button, I'd really appreciate it. There's a link below to an opt-in email list. If you want to get a 15-minute alert, it says a VIP link in the description area below. I'll send out an alert 15 minutes before we go live tomorrow night. Just enter your email address there. We hate spam too. And again, please subscribe to the channel. Hit that like button. Everybody have a profitable trading day. I'll talk to you soon. You bet, Mila. Good morning to you.